Hey YouTube, Jason Ramos here with Day Trade Fearless. If you're new, welcome. Make sure you subscribe, like the channel, and if you have any comments, make sure you leave them below. I will return them. So I appreciate you watching this. Just so you guys know, what we talk about here are tips and tricks for trading the stocks, options, futures, forex, and even Nadex binary options. So everything I'll teach you, you could kind of use throughout all the different markets. And today we're actually talking about trading chart patterns, and today's chart pattern is the inverse head and shoulders. If you haven't seen my head and shoulders video, make sure you go back and watch it, okay? Because there's some really valuable stuff, but I'll talk about two other things in this video. Ways to help you create better and better better entries and give you high reward, low risk type of trades. So let's not wait and let's get right to the charts. Okay, so here we are on the chart, and we're looking at Snapchat, okay? Ticker symbol SNAP. Now this is actually a perfect chart in a couple of ways for inverse head and shoulders. There are also some head and shoulders, and there's also things in this chart that will help you, hopefully, to make you understand head and shoulders, inverse head and shoulders. Patterns don't have to be perfect for them to work out. Okay, so let's first start off from the left side of the chart, right? We actually have a head and shoulders here. Head, shoulder, shoulder, head, shoulder, right? Now, real quick, let's do a quick little description. What a head and shoulders is: price rallies, it pulls back, we make a new high, price pulls back to a support level, rallies again, okay, but doesn't break a high, usually goes to the left, the high of the left shoulder, and then reverses back down, okay? And then you have your major support level right here. Then what you want to look for is wait for price to break down. On the kickback is where you want to enter the trade, somewhere around here, okay? And then look for the rollover. Now, remember, with patterns, the way to measure moves, do measured move patterns, is usually by 100%. So from this high to this low right here, okay, of the support level, like where the patterns start to form, just to duplicate that, and then that becomes your target. Okay, now an inverse head and shoulders is the same exact thing as a head and shoulders, just upside down. So what you have is you have price makes a low, it rallies, makes a new low, rallies, okay, makes a higher low, usually to the same level as this shoulder, right? And then rallies up, okay, back to the support level, and here you go. And then you look for the breakout, the snapback, and then the continuation higher. Okay, so as you could see, we have the shoulder, head, shoulder here. Here we have the shoulder, the head, and the shoulder here, and the neckline. Okay, that's an inverse head and shoulders. This is a head and shoulders. Everybody with me? I hope so. So when you start to identify these patterns, you'll start to see them work more and more. So let's kind of get rid of all these, okay, these strings. And as you can see, we have a shoulder, a head, right? Because we make a high, we pull back, make a higher high, pull back, right? Make a lower high, and then we fail. And here's our neckline with our support level, right? And then price tends to fall from there, okay? Here's another head, shoulder, head, or sorry, shoulder, head, shoulder, okay? Your neckline, and then the failure, okay? Now, this video is about finding inverse head and shoulders, okay? So what we're going to do is get rid of these lines, and we actually have an inverse head and shoulders here. If you look, we actually have the shoulder, right? Because price falls, bounces, even though it's small, makes a new low, rallies, okay, makes back up to the support level, right? Pulls back, here's our other shoulder, and then we could say this is our neckline, right? And then price breaks out, because if you look, if we zoom in, price goes here, comes up here, right? Fails, comes back with this, and then pulls back to make the right shoulder, and then we break out, and then look at this. This candle makes a high and then comes all the way back down. We retest the breakout level. We retest it here, okay? And then price continues higher, and that actually marked the low for a while, okay? Here's another head and shoulders, right? But here is another inverse head and shoulders. Now, this is what I would call a slanted head and shoulders, okay? Or inverse head and shoulders, right? Because you make a high, make a low, make a higher high with a higher low, but then this is the breakout, right? Up here, and then price pulls back and then it keeps going higher. The reason I show you this is it's not a clean one at all, but it is a inverse head and shoulders, okay? Here's another one. Here's our neckline, okay? We could say we have the shoulder, the head, the shoulder here, right? Price breaks out, we retest on the snapback, and then price is off to the races, okay? These happen over and over and over. Here, we can almost say, here's a shoulder, the head, the shoulder, right? Because we retest this neckline, and then what does price do? It breaks out, pulls back, right? And then it's off to the races. Now, another thing is looking for the extensions, right? The targets. If you don't want to play the patterns, right? If you don't want to play the snapback pattern, maybe you want to play the targets of these trades, right? So let's do this. Let's clear all these drawings. And I love my Fibonacci extension tool, right? I'll take it usually to the left shoulder to the high, okay, and then back down, and then I like to play the 100% move for a reversal, okay? And you can actually see it. It wasn't much, but here it's still pulled back, right? It came literally to the 100% move and then pulled back here. Then it went up and then it had a steeper pullback, but it literally hit to the penny, the 100%, and then it pulled back. On Snap, I think it pulled back like 15 cents from that high, okay? But it does work. Here, now this one's going to be a little trickier on the inverse head and shoulders. They're slanted, right? So with that, sometimes I like to draw two lines. Usually I like to go to this high, right? Go all the way here, and we could see it was a big move, but 100% move took us all the way again to the penny right here and then pulled back. Okay, and this was about a 25-cent pullback right here. So we can also see, what if we drew it from here to the left shoulder and then back down, where's the 100% move? And you could see the 100% move is right here. We touch it and pull back. This is why I love the 100% move to actually trade, because it's a lot better trade, I believe, on a percentage of it working out. Now, everything I've shown you is that you've seen the snapbacks. You have to be able to identify them and actually look at them and see them. So I'm back here with you guys, and I just want to kind of let you guys know everything with inverse head and shoulders and head and shoulders is identifying them, okay? You have to identify these trades to really get them and understand them, but you need to watch them. Use the Fibonacci extension tool, okay? The 127, 161.8, and also the 200%. When I say 100, 200, same thing, okay? Those are the moves that I like to trade for the pullbacks, okay? So I like to, because the 100% move is always going to be the most accurate, and I would say 70% it'll pause at the 127, about 85 at the 161.8, and usually about 95 to almost 98% it'll stop and pause. Sometimes it'll come up a little short, sometimes it'll go a little farther, but those are the best trades, okay? So I hope you like that. Thank you for watching. Remember, subscribe, comment. Down below you'll see the recommended brokers that I actually like: Thinkorswim, Tastyworks, a couple others, Stage 5. I also have a couple recommended trading books that I think every single trader should go out and read. So if you have any questions, throw them in the comments. I will answer. And until next time, thank you.